Good morning, retail traders, or good afternoon. The market's closed, and I want to talk about part 3 of the AMC charting catching a knife. And if you've been watching part 1 and 2, you'd understand what I'm getting ready to say right now, which is going to be part 3. So let's get right into it. First thing I want to do is check out to see if we had any news on this stock, AMC. Now, everybody knows how I feel about wokeism. I think Hollywood has gone too woke. They need to get back to the roots. They need to... I remember when I watched Warriors. I snuck in a trunk to go to a drive-in theater. It was the big movie around. It was about gangsters. If you ever saw Warriors, come out and play. Then he'd be hitting his little bottles going, come out and play. So Warriors. And then we had movies like Godfather and Chitty Chitty Bang Bang and Blazing Saddles. Movies that were funny. Movies that were love movies. You know, we didn't have politics thrown in our face. Wokeism thrown in our face. So this will ruin the industry. COVID was a big help. COVID, nobody could go to the theater, so they found other ways to occupy their time. Then they realized, hey, I have more fun just doing things, playing music, visiting friends, and movies are for dates. You know, if you want to take a date out, but I can't even, I've took maybe 3 dates to a movie in the 50 years or the 40 years that I've been dating, 45 years that I've been dating. We always went to like fun centers where we play pinball or go to a party or just go out to the lake and make out. So we got last year, this 2023 was the worst year ever for movies because they tried to shove their politics down our throat. And that's why I think that's the big reason why AMC is the way it is today. They can't fill the theaters. They bring some streetwalker down to try to boost sales. And I'm talking about Taylor Swift. Everybody got all excited about Taylor Swift. She's nothing to me. She can't even sing. All she does is wiggle her butt up on stage, and that attracts young children, the younger generation. So that's my reason why I keep talking about AMC. That's why it's fallen down like it is. It's billions in debt. They got to go back to the roots and get away from politics. With that said, I'm trying to teach people how to catch knives, and I seen a place where we were starting to consolidate in a channel. In video 1, I said we'd break out of this little channel and pull back, and that this $5 level is very important to institutional buyers. If it went below 5, they're not going to look at this stock. They'll probably cut their losses. Now you're going to get people that are stuck in this trade, which I feel for you, but you got to be in the now. It's a meme stock. It's a pumper stock. It's a stock that you are going to, if you get in it, you're going to get lucky on a good pop. If it does bounce, so you don't want to put all your eggs in one basket on a stock that is about bankrupt. Somebody might buy them out that has a lot of money, that can pay off the debt, and then you might have a good bounce. But for right now, it's only a technical trade. The $5 means everything to institutional buyers. So today we dipped down below that 5. I'm not saying we can drop a lot more. Maybe this is a good spot to buy at, but I'm not going to buy this stock because it went below 5. If it would have stayed above 5, I would probably loaded up a position and small one, not a big one, and just took a chance. But today we broke below. Well, last night we broke below, and then we broke below again. And we're going to do it again. And we could do it again. We could see this thing down at $1. I'm not going to tell anybody to sell their position at a loss, nor am I going to tell anybody to buy a position and to run it up, because it's a meme stock. It's a pump and dump. It's the highest shorted stock in the market right now. There's all kinds of bad stuff. They're way in debt. They can't put out any good movies. They got a CEO that's wishful thinking, that's already tried to split it up, and it was shorted. This is just a crappy stock. I just want to make that real clear. Yeah, eventually it might pop up, but now that we broke below that 5, I don't want to have nothing to do with it. I'll keep it on watch, I'll day trade it, and I'll scalp it, but I won't hold it for a long position, not until we get back above 5. If we get back above 5, I'll take it. So when we come out of the snake, we formed one of these flags. Every one of these flags are bullish, and this is the one it formed. It run up and hit my hard resistance. That was that previous high right here, and then stopped and pulled back, just as I said it would in my previous video. I said we'd hit the 50 and we'd pull back and retest this bottom. And we retested it, and she gave up. So I would not take this trade. I'll take it as a day trade. I'll put it up on my 1 minute time frame, and I'll do a little snakes. We got a cup and handle right here. We've got an inverse head and shoulders right here. We have a 1, 2, 3 down here. See, I would have took this trade this morning on this 1, 2, 3 and run it up to the 200 and got out of the trade. But I didn't trade it today. Why? Because we went below that 5 and I had better things to attend to, better stocks to look at. I'd rather keep my eye on a stock that I can get a good. This is only 471 to 487. That's a 16-cent bounce. That ain't worth trading. The momentum's dead. This is in debt. It's a pump and dump. So, you know, I'm not. There's better stocks to be trading right now, especially if you're trading options. I mean, just look at. I'll just pull one out of my head. Amazon. Yesterday, if you were looking at AMC, you could have been looking at Amazon. Got in at 147, maybe run it up to 154 today. We got Nvidia, fired. It's on fire. NVDA. We broke that resistance high on the yearly. Called it out. First of the year, I said we're getting ready to go to 650. We had an 8-month Darvis box. Each one of these spreads were worth $100 to the top. Very good payday. 8 months. All you'd had to do was take 4 trades. We got Tesla. We got Eli Lilly getting pumped by the fat cats. You can play puts and calls with this baby. We took it today. Let's clean this up. You can tell I've been trading the heck out of this. You want to trade stocks that have cash, that aren't in debt. If you're trading a company that's in debt, you're going to have issues. It's going to be a pump and dump. Who wants to trade a company that's way in debt? I would rather Meta. Meta has what, $20 billion in cash instead of $5 billion in debt. You had a 3-day sell-off into a ascending triangle. Boom. We broke out today. Traded this one here too. Meta puts on the pullback because it took such a big breakout. You could trade the SPY. The easiest trade out there to trade right now. There's just a lot of good companies out there that you could be trading besides AMC. It's in debt. So look for stocks that have cash. Now we got earnings coming out. I think that's the biggest catalyst right now. This coming Friday, if earnings are great, I think we're going to have a little bit more run. We're going to break the resistance levels on the SPX and the SPY. If you look at the 3-year chart, we're at a double top, triple top. On the weekly time frame, we're at a double top. And I called this out, said we're not going to break this double top until we consolidate. And we sold off the first week of the month of the year, and now we're starting to show momentum. These fat cats on the fat cats, who I call fat cats, are the people you see on CNBC and all the hedge fund managers. They never get it right. They never get it right. They didn't call the reversal off the 200, nor have they called the double top resistance. But if you're a good chartist, you can see this coming before it even happens and get out of the trade or get in it. So I think the moral of the story is, and I want to save people money, we're going to bounce. AMC is going to bounce because it's going to get pumped. But right now we're below that $5, and that's a dangerous situation to be in right now. I'm not saying it's a pump. Jimmy is not into Hollywood. I don't like being told how to live. And they've got way too involved in politics. And it's caused this market to go down. They got way too deep in wokeism. They're putting out crappy movies. And that's what this is about. The only time they make money is when they're at the concession stand selling popcorn. Or they have some streetwalker do a concert. Now, if Taylor Swift was a good singer, she wouldn't be up there shaking her ass. She'd be up there singing. That's about it. I just don't want you to get stuck in a bad stock. This thing can bounce. I mean, people are going to pump this stock. But it's not going to be a trade for me unless it breaks the $5 again and gets past that 536. I'm not even going to take it then. I don't even think I'll ever take this trade ever again. Just because of the reputation that it has. It has a bad reputation. That's it. Retail traders, there's a lot better trades to be made. I'm not going to tell you to cut your losses, because if you're down big, I got to leave it up to you. But I'm just telling you how I'd look at it. I've been here 20 years, and I've seen these pumps come and go. And I just don't want to see anybody take a big risk and get stuck and put all your eggs in one basket, hoping for a miracle. But eventually, someone's going to come out and say, I told you so, it bounced. But it could take a half a year. It could happen next week. But for right now, the way society is, I'm afraid to even go into a theater and watch a movie. Might get blown up. Somebody might come in there with an AK-47 and just shoot you all up. I'd rather stay at home, and this is what I watch. I plug in the old YouTube, and I watch little movies. I learn about stocks. I get education. I like to watch boxing. We got Pacquiao and Mayweather getting ready to get into it big time. I like to watch Trish Regan. I like little bitty movies that can. Americans have short attention span. So if I can sit here and watch a little bit of Elvis, I'll be happy. Or maybe some fishing shows or something like that. Something that's real. Dana Perino, a little bit of Hunter Biden going on here. But I'll sit down and watch a boxing match, maybe an old Ali video. But that's how I occupy my time now. And I don't spend my time on TikTok, but I thought about it. And I create my own videos. I create my own little movies.
Hello, retail traders. I want to give a
And each one of these movies is a learning lesson. Now, when I feel like I want to get political and I'm seeing a bunch of stupid stuff going on, this Jason Aldean song, when everybody started freaking out about that great song, I want to do a recording on it. That's how I entertain myself. So there's a lot of reasons why the movie theater is going downhill. And part of it is that they're got too woke and they got too political. Any business that gets very political, just look at them, how much they've dropped. You know, I go to Disney, Target, Budweiser, Nike, any of these that try to shove politics down our throat, AMC, with their little political movies that they tried to throw on us in 2023. I just don't have time to do that. So I got a lot of good little short videos in here that'll teach you how to trade stocks and what to look for, chart patterns. Here's a little picture of me and my dog. Passed away. So that's it, retail traders. Have a great day. Right now, AMC's off my watch list. I probably won't do any more videos on it until we break that 536. Then I'll think about getting in the trade. Think about it, but I know it's a pump, and I can do a lot better watching other stocks. I'd rather put my money to good use than to sit and watch it melt away. But AMC will eventually, they'll get enough people in here to pump this stock. But once you go below that 5, it's a lost treasure, because the institutional buyers ain't going to come in here and buy that stock under $5. They're going to wait for it to bounce above 5. So I know this is a rant, and I kind of feel like Josh Brown in a way, because he's kind of ranting off here lately about, the market's bullish, take advantage of it. And I'm saying we're at an all-time high double top. I'm not going to be that ambitious until Friday. And then when earnings come out, I get any kind of inclination that earnings are good, it ain't going to take much. If earnings are, let's say, 55% better than 45% worse, the market's going to love that. It don't have to be much. Just a little inkering, and then they'll keep this momentum in this market. If not, we could have a nice little bitty pullback and then take it back up one more time and then break out. This is an election year, and they're going to be spending a lot of that stimulus money. Not personal money, but the government has printed $6 trillion in the past 3 years, and it's not all spent yet. So they're going to use a lot of it here this election year to try to bribe votes, and that could be a reason for Wall Street being so bullish right now. Well, have a great day, retail traders, where I talk about chart patterns, moving averages, and being in the now.